Real assets is a very active area for exactly those reasons. It has three main pillars. The real estate pillar is in a bit of a down cycle currently. I feel that given the macroeconomic events, some of the innovation that was taking place in the energy efficiency, the climate, those might slow down because there's a renewed focus on capital preservation. This second pillar is infrastructure. I think the events in the macro side actually have been a tailwind for the infrastructure space. I see more innovation happening here in the next 5 years. The natural resources space is directly linked. I think we're at a particularly inflection point where the security we have for oil, gas, that security needs to be maintained. And so overall, I see more investment happening in the infrastructure pillar, and I see more evolution happening in real estate and natural resources. Large pension funds like ours are taking longer to close on our investments. I think the way managers can help us is by having more patience. That goes a long way in trying to reach a mutual investment partnership, I would say. The second challenge is distributions and realizations. Given the market environment, distributions have slowed down. If managers can do a good job of identifying why distributions have slowed, what can we expect going forward, that goes a long way in explaining to us what we might expect, because we know that distributions will take some time to come. It's a simple answer, but it's very hard to implement. The simple answer is you can't be a passive investor waiting for things to come to you. We all see a lot of investment flow. The only way you can keep on top of the market is to be an active investor. Look at a deal even if you don't have an interest in it. That way you are in the flow, that way you're on top of trends. In the infrastructure and energy transition and the renewable space, I was reading an article recently that said the top 100 managers in infrastructure have now raised $1 trillion. This pace of growth over the past 20 years is faster than what private equity experienced. I think this is the way forward for real assets.